Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Steve Schoffstall, Director of ETF Product Management at Sprott Asset Management. He joins me to discuss how the demand for copper could be impacted by the transition to cleaner energy. It is great to have you with us, Steve. Welcome to Trade Talks.
Thanks for having me, Jill.
All right, you got it. Let's talk about Sprott for a moment here. You've expanded the footprint in the critical minerals sector over the last few years. What minerals are of particular interest to you?
Yeah, we tend to look at the minerals in three separate buckets. So we look at the generation of cleaner energy. So that would be things like silver, uranium, and rare earths. We look at the transmission of cleaner energy, I think copper mostly for that. And then also we look at the storage of cleaner energy. So you think of the battery metals, we think mostly of lithium, nickel, cobalt, graphite, manganese. And the reason we focus on these nine is because we think that as we go through this energy transition, they're likely to see significant growth, whereas some other minerals that like zinc or aluminum or steel that also play a role in the transition see a lot of their uses coming outside of the transition. Copper is one of those minerals that we're really starting to get a lot of investor interest in.
How is the demand for copper expected to be impacted by the transition to cleaner energy?
So copper is really almost like the Swiss Army knife of metals. It's basically anywhere where electricity flows, you need copper there to move the electricity along. It's actually the second most conductible metal outside of silver. And typically we see copper being used in many applications because silver's just too expensive. And the scale of which we need to move electricity as we go through the transition, silver would just be cost prohibitive. When you start looking at different applications within the energy transition, one that requires a lot of copper is electric vehicles. When we look at electric vehicles versus traditional gas-powered cars, we need about 2.4 times the copper just for one car. So as we're expecting to see significant growth in EVs and their adoption, we're expecting to see the copper really, the demand really to grow along with that. And as it relates to EVs, copper is not just used in the vehicle itself. When you start to think about the charging infrastructure, there's a lot of uses for copper there as well. If you look at just one charging station, for example, depending on the technology that's being used there, we could see somewhere from about 2 pounds up to almost 20 pounds of copper in one single charging station. And if we look at all the copper that's actually been produced throughout human history, it's about 700 million tons. If you look out through 2050, we're expecting to need about 1.4 billion tons. So over the next 26 or 27 years or so, we're expecting to need about 2 times the copper that we've mined throughout all of human history.
What challenges do you see with meeting the increased demand for copper?
So copper is one of those metals that we've pretty much mined for most of human existence. It's the third most mined metal outside of gold and iron ore. And because we've been mining it so long, we've actually gotten to and used up most of the easy copper. So if we were to go back through the last, century and a half or so, we would see that ore grades have declined significantly from about 5% down to 1%. So what that means is as miners are starting to move earth and trying to bring more copper to market, they actually have to move a significant amount more of material than they would have had to, just several decades ago, let alone 150 years ago. We also have an issue where since we've mined the easy copper, we're having a lot less mines of great scale and great deposits being discovered. So those are actually becoming less and less frequent. And when we do find copper, it tends to be in places that are more remote. So the infrastructure is not generally readily available. And then finally, when you look at once you find a mine and go through the permitting process and construction and get to the point where you can begin producing, it generally takes about 16 and a half years or so on average to get that metal out of the ground and into the market. So those are, from a supply standpoint, some of the overhangs that we see as we move through this energy transition.
Right. And of course, we're seeing that in the EV space in particular due to the scale and manufacturing of it. So the question is, if there is so much demand, why have copper prices fallen if the outlook is that optimistic?
I think there's a little bit of a recency bias if you look at prices within copper. If you go back to the turn of the century, so about 24 years ago, you would see copper was about 2,000 pounds per ton. If you come to where we're at now, we're up around $8,500 per ton. So recently, over the last 2 years or so, we've seen prices come down a little bit from about $10,000 to the $8,500 a ton. Some of what you see there is copper's reputation as a barometer for the global economy and the health of the global economy. We're actually starting to see that wane a little bit. So if you look at China, for example, it's traditionally been a bellwether. Copper has been a bellwether for the Chinese economy. We're actually starting to see a decoupling if you go back to the middle part of 2021, where we see physical copper is actually performing quite well, even though the Chinese economy has struggled. And what we're seeing for that reason is largely the spending that we're seeing as it relates to the energy transition. So just last year, we saw almost $1.8 trillion on a global scale spent into the energy transition. A lot of that comes from China, who is actually the world's largest investor in the transition. And about $600 billion of that, even a little more than that, was actually invested into building out the infrastructure and everything needed for electrified transportation. So in our view, China's increased spending and then also other global spending as it relates to the energy transition is actually acting as a supportive for copper prices.
And finally, Steve, in the last minute here, how can investors participate in the growing demand of copper?
So we have two ETFs. Both are pure play strategies. We have the Sprott Copper Miners ETF, ticker COPP, and then we also have the Sprott Junior Copper Miners ETF, ticker COPJ. Both ETFs employ a pure play strategy, meaning that at least 50% of their revenue or assets of the underlying constituents are tied to producing copper. So think of things like miners, developers, and explorers are actually made up or being held by these ETFs. They're the only two that have that pure play notion. A lot of other strategies that you'll see may have much more diversified miners in there, and you're starting to get exposure to other metals that you might not want in your portfolio if you're trying to target that copper opportunity.
All right, Steve, we appreciate the insight. Thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.